And it looks almost exactly like May in literally every way. But we're in a like liquidity is different now than it was then, so it's hard to it's hard to say if it'll play out exactly the same way. But it looks very similar. If you look at the Tuesday leading up into May's run and our current positioning, it's very similar. They were unable to get as much liquidity on this pullback as they were in May. Like they got more here, but that's because so many people sold out on Tuesday, right? Everybody in May started selling covered calls on Tuesday and dropping their long calls. And so I think that's why they got a little bit more liquidity back here versus now. That would just mean there's more pressure to the upside though, right? Bat bones. But I still think it looks really good. And if you really zoom in, we've already started to reject. So these aren't meeting, right? They're pulling back apart. We went down 5% on Tuesday in May. I think we went down more than that. We went down a lot on Tuesday in May. From our pre-market high, we dropped 12.84%. From the previous close, like almost 10%. Obligations are cash settled, but that doesn't mean that they're purchased yet. This is where the deferral comes into play. So the deferrals are not done by the short funds, right? It's not the short fund deferring. The short fund wants the price of the stock to run, right? They want to cover their obligations, and then the price on the stock goes up, and then they have something to short, right? This is the ideal scenario for them. Positionally, we mirror them. We go long on the upside, short on the downside, right? So we want to be like long delta, long vega here, or long volatility. And then we want to be short delta, short vol here. Just like them. There's no difference, right? But when they cash settle on a holiday, a payment is made, right? That goes to the counterparty. This 3-day ACH payment is what gets deferred. But the difference is there's an information gap, right? Short hedge funds or short vol funds, they know when a deferral is in place. They have knowledge of the deferral. We do not. It's either long shorts because their position is at risk, or simply XRT is holding negative cash, right? So XRT is just sitting on a big pile of money that they haven't deployed. And not just XRT, it can be, all 108 ETFs for GME or however many there are now. FINRA has no knowledge of the deferral either. I mean, they do. They have the filing and everything. They're not going to disclose that though, right? Not publicly. So when they close those forwards and the short vol funds settle their obligations, right? Then the buying that we see occur during OPEX is the ETFs rebalancing. So they are they shed their forward contracts and they're buying securities, buying equity to balance NAV. So while they're operating at a deficit to NAV, they use forward contracts to cover in the interim. And then they close the forwards, they buy the equities once the balance is cash settled. And that's what drives our volume. The rest of OPEX is the hedging. Not only from T+2 exposure, right, which was higher in the past, but also from, market makers hedge flipping from negative to positive gamma and call interest, as this is delta hedged. So the volume from the ETF buy drives the positioning and the hedging, right? Which then, further accelerates price action, and that's what, causes our T+2 rollovers. Anything interesting in the options chain for our 2 tax loss harvesting stacks? I mean, last week we saw all of the all of the like options interest rotate from synthetic short to long vol. So when I was like arguing with Walken last night, they're betting on the same shit we are in the same time frame. We didn't see the long vol rotation in the past two OPEX, right? No. That's why today, seemingly, we have very little resistance to the upside without them directly shorting, right? And we see the borrow, we're seeing the borrow pool be utilized, which causes massive spikes in the retail borrow rate. Do you think there's an entity that's actively working against the volatility shorts play, and by extension against us? No, not really. No one cares enough. Long shorts don't like vol shorts. That's what makes Upstart really attractive, is that Upstart has a lot of long short positions, but it also has a lot of volatility short positions. Volatility shorts create risk for long shorts, aka Melvin 2021. Melvin was fine in his long short position until volatility shorts decided to come in and fuck him over. I mean, technically we're more liquid than we were in May because of the split, but that's relative, I suppose. There's no shares available. Puts? I mean, they borrowed shares. There's no shares available that you can see. That doesn't mean there's no shares available. There's lots and lots of shares available, but that doesn't mean they're available for you. It just means they're available to borrow. Well, the reason for our more, like, so we saw the market rally earlier, right? And that pulled both Upstart and GME up quite a lot, and Fubo even, right? Varying degrees on each of them. Upstart has less call interest than GME does. Fubo probably has more call interest than either of these, but Fubo's also far more liquid, right? So lowest liquidity, highest interest, well, highest potential for FOMO, most leveraged. You kind of have a trifecta of different types of exposure here. But on the rising market, even though there was no covering occurring, we see all three of these run, right? And that's because the short side positioning is closed. They've been closing it out this whole time, right? And if they want to maintain stability in the price, they just have to short, because they don't want to open up puts into something that's going to run, right? So they can short and, you know, try to bleed out the short at the bottom before it moves back up again. Well, the gamma's flipping positive because they're pulling back their short side positioning, which leaves us sensitive to upside moves, right? Because now there's no negative gamma on the chain pulling us down. The gamma's positive, pushing us up. Can you explain a little bit more on the gamma positive flip? What's the impact of price action? Well, if we run, we'll run hard like we did earlier. Right? How many fucking, you know, $30 moves over the last few weeks have we seen on SPX with no effect on Upstart or GME, right? Even think like end of day yesterday, right? End of day yesterday, SPX moved from, what was it? It was like 3802 up to 3020. Nothing, right? Barely any movement on GME or Upstart, right? But today it moves from, you know, 37.95 to 38.37, right? Like a $30-40 move. So about double yesterday's, but we get, you know, a significant amount of price action. That's because those downside hedges and those like put walls, that blanket that they use to suppress price action, has been pulled back, and we're now exposed to upside price movement. Please clip the fuck out of this. It will shut so many people up. Oh man, it's so long though. I don't know if I could clip it. Go away. Why aren't you hungover? You know, Walken, if you stop getting hangovers and just start drinking right when you wake up, you've become an alcoholic. If you're waking up drunk, you're an alcoholic. Gave myself an IV, we're good. All right.